Asensus Surgical is up over 30% today in reaction to news that the company will be partnering with Nvidia to improve its intelligent surgical unit, the foundation of the medical device maker's surgical systems. As part of the deal, Asensus will use Nvidia tools to advance the augmented intelligence capabilities of their ISU. Asensus has offered augmented intelligence features such as digital tags and 3D measurements as part of its ISU, which comes with Nvidia's computing technology. And this is a quote from their CEO. So through this collaboration, Asensus is furthering its vision to enhance clinical intelligence in surgery through the use of advanced augmented intelligence tools. Per the terms, both Asensus and Nvidia will jointly develop and commercialize digital surgical solutions, and both firms will get access to relevant product roadmaps. So this is obviously a pretty good sign for the company, and we're up over 35% in reaction to this news. If you don't really know what this company is, I'm going to play a quick 2-minute film here from their company right now.
Asensus Surgical is a group of trailblazers that set out to tackle some of the shortcomings of existing technology in surgery.
Every individual I work with is dynamic and is an expert in what he or she does, but knows so well how to work well with others. And I think that's what makes us so special as an entire collaborative team across the globe.
Surgery is a highly stressful environment. Hundreds of decisions need to be made on a per-case basis, hundreds of surgical maneuvers, and quite frankly, surgeons don't have access to technologies that are readily available in other industries.
For Asensus, the voice of the customer is very important. For this, we are always in contact with our users and users that are not only the surgeon, but also the clinical staff that works in the OR, to help the surgeon to be comfortable during the procedure, to feel less fatigue, and thanks to this, be more precise during the procedure.
So Asensus was started really with the idea that there's always going to be room for innovation in medical devices. There's always going to be complication rates that are unacceptably high, and we think that there's lots of room left in the robotics market, and there's an enormous space in the digital market for concepts that could not have been brought to market 5 years ago or 10 years ago. They've needed the advancements in machine learning and computer vision. We can bring those together meaningfully in a way that really suits the surgeon and ultimately, of course, suits the patient.
So I think that the future of surgery will be robotic surgeries, will leverage the information that the robot can provide them. That will decrease the amount of time that needed to be spent for each surgery, while increasing the results we are getting and limiting the amount of complications that we have today.
By digitizing the interface between the surgeon and the patient, we're able to reduce variability between one procedure and the next. And most importantly, the surgeon is working in a comfortable position, and the patient is able to recover faster from the procedure because the incisions are small.
We are changing the operating room to improve outcomes for surgeons, to improve outcomes for patients through AI in ways that we can't even envision yet as a society. And it's exciting to be such a part of that future.
I hope that was a good breakdown of things for you. With that being said, I'll go into the company's financials, and at the end of the video, I'm going to give a price prediction based on technical analysis. So with all that being said, let's dive right in. So we can see here that price to book ratio is at 1.1. And for those that don't know, that basically means that the market cap is 1.1 times the book value of this company. Book value is traditionally just the assets on its balance sheet. So this 1.1 rating, or this 1.1 ratio, is actually a very good one for the stock, and it's actually below the company's, or excuse me, the sector median. and we are below the company's 5-year average of price to book ratio. Obviously, the company doesn't make any money, but it is good to see that the company is cheap on a price to book ratio. And then we can take a look at the price to sales as well. So we have a price to sales of roughly 10, which is above the sector median, but is significantly below this company's 5-year average. So, definitely a number that is pretty solid. So on a valuation basis, on a price to sales and price to book ratio, we are cheaper than we have been historically for this company. And then Asensus Surgical has revenue growth of minus 3% or minus 0.3% over the past 12 months. So unfortunately, revenue has dropped over the past 12 months, but we are projecting out a 23% gain in revenue over the next 12 months. So this tells me that yes, revenue has been poor over the past 12 months, but we are expected to see that improve over the upcoming 12 months. And then we can see here that the gross profit margin looks pretty poor as well. So looking at these profitability metrics, we don't look the best. So we have about a 79%, a negative 79% gross profit margin. This basically just tells you what a company makes for what it sells. So it's just simply revenue minus cost of goods sold. So this number here tells me that this company is losing money for everything that it sells, unfortunately. And this number is even worse than the company's 5-year average. So on a profitability basis, the company definitely needs to improve things. And then when we take a look at the cash per share, the company has 3 cents in cash per share, which is roughly about 8% of the market cap in cash. And to kind of give you a better breakdown of the company's ability to fund its future operations, since we aren't profitable, I'm going to go over their balance sheet quickly here. So with that being said, let's take a look. So we can see here that they have $37 million in cash and only $5 million in debt. So that means that they have $35 million more cash than debt. So that's definitely a good sign for the company. The only issue is that we have net operating cash flow of minus 63% for the past 12 months. So the company is going to have to either issue new debt or dilute shareholders over the coming quarters, just to continue to fund this company's operation. So, be on the lookout for some share dilution for this name. And then let's take a look at the Wall Street Analyst Ratings. So we see 2 different firms have buy ratings on the stock, and there are 0 bearish firms. So we have two buy ratings, as I had said, one with a $2 price target and another with a $1 price target. So that's obviously significantly above the market price right now. So that definitely tells me that Wall Street is thinking that the stock is trading at a discount relative to its current price. And with that being said, let's take a look at some of the technicals here for the stock. Let's take a look at the chart and see if we can't give a logical price prediction. So shares are coming up to this 50-day moving average, and we look to have rejected that level intraday here. So unfortunately, it looks like this 50 DMA could act as resistance for the stock and could likely cause a move lower over the coming weeks for the stock. So that's unfortunate, right? Hope that definitely changes for the stock, but currently being below all daily moving averages. And we had the 50-day moving average cross below the 200-day moving average, which is known as a death cross and implies bearish momentum. So we have bearish momentum, and we're kind of coming up to test this 50 DMA, which we already rejected intraday. It does look as if the stock is likely to move lower over the coming weeks. Obviously, I'm rooting for the stock. I think it's a pretty cool one. I think it's a really good story stock, but keep in mind, it's still a story stock. It's not a fundamental company yet because it doesn't make any money. So with that being said, though, I think the chart could pull back in the coming weeks. So with all that being said, I hope you enjoyed the video. I will end it there. If you got some value from this video, please leave a like. We post company breakdowns and important market moving news on this channel on a daily basis, so make sure you are subscribed. If you would like to receive my daily portfolio moves, my exits, my entries, and see how me and my team of analysts are trading the markets, join the Discord through the link in the description below to get our free 7-day trial. Also, if you would like to join our free daily newsletter, sign up to our Substack, which is linked below as well. With that being said, good luck everyone. Happy trading, happy investing.